Welcome to Transform with Greg Carson. We're a podcast where we're focusing on the transformation of market ecosystems and the people behind them. We interview people who are driving transformations and learn more about where to invest time, money, and spirit. Today's guest is Dan Tapiero, a friend of mine who's the esteemed founder, CEO, and CIO of 10T Holdings and One Roundtable Partners. Dan is a famous macro investor with 20 years of hedge fund trader and investor experience, formerly Duquesne, SAC Capital, Tiger, and he's been a strong entrant and thought leader in the Bitcoin space and how Bitcoin interacts with macro. And he is at One Roundtable and at 10T. He's been doing very significant investments throughout the ecosystem and the marketplace. So I am very pleased to be welcoming here. And I just remind everybody that any views expressed in the video today are personal views of myself and the participants and should not form a basis for making investment decisions, nor be construed as a recommendation or advice to engage in investment transactions. We hope you enjoy the show, and I'm here welcoming Dan. Dan, welcome.
Greg, great to be here. Glad we could finally do this. It's been a little hectic in the marketplace, and I know we've postponed this a few times, but I'm glad to be here, and great day to be here. Yeah.
The market is active. Do you want to just give us? I gave it 2 seconds, but do you want to give us like just a little bit of a background for like how you got started investing? I know it goes way back, which is really interesting for the viewers, and what formulated your kind of investment theses and you know how you became you. Let's say like which companies were the most influential.
How it became me? Do we really want to know that?
We want the secrets, all the secrets.
Well, so people have heard this before too, so I don't want to go on too much about this, but you know, I've always focused on very big picture macro themes. And it sort of comes out of my experience just generally in college and before, where, you know, I was very interested in history. I did my BA and MA at Brown in European history, the history of thought. And, and, you know, that process of reading, let's say, 20 books and then coming up with your own thesis and writing that thesis out, frankly, is very similar to even what I do today. You know, I was not an economics person. I didn't do, you know, there was no pre-business. I didn't do any of that. And so I've always been interested in these big structural changes. And that's why macro was more interesting to me, certainly in the very beginning. I felt very at home. It was very comfortable for me to think about, you know, changes in the world that might be happening. And then, of course, to write out, you know, a thesis about why that might be. And then instead of writing a paper and getting a grade, you know, you actually make a bet on it. And so you're really living with it. It's not a professor telling you you're right or wrong. It's the markets telling you you're right or wrong. So I, you know, naturally, I had a, let's just say, natural affinity very early in macro to think about macro themes. And, you know, my first real job was at Tiger. I did previously at I call it a second tier investment house. Just, it was only 9 months. So it was hardly even a job. I was supposed to be in a training class in 1991, and we were in deep recession. And the training class was essentially the head of the area telling me to go find somewhere to sit down and come back to him in 3 or 4 months to tell him like what area I was interested in. So it was hardly a first job in a way, but I met a great guy there who ended up becoming the head trader at Tiger. He hired me soon after. And this was at a time when people had not heard about hedge funds. They didn't know what it was. And I had read all about Soros, and I'd actually read The Alchemy of Finance and The Market Wizards in college. You know, I'd always had a strong interest both of my families were, on my mother and father's side, were in business a long time ago, but also, very financially focused. And so I sort of grew up being aware of a lot of things. I didn't necessarily go and study them, but I sort of naturally followed my curiosity. And, I can still remember my grandmother, talking about her IBM shares all the time and, that kind of thing. And so um, I had this natural affinity for being able to read a lot and then come up with ideas that other people, may not have been able to come up with. And so Tiger was fascinating because I was hired to be the night trader for European bonds and currencies, night also analyst. No one wanted to come into the office at 3 a.m. and work till noon. And I thought, well, I'd of course heard of Tiger and I'd read about all of the greats, at the time, Soros and Tiger and Lou Bacon and Tudor. And I just thought, you tell me what you want me to do and I'm going to do it. I'd been an athlete in college and so physically I was fit and able to deal with a very demanding physical work schedule, getting in at 3 a.m., getting up at like 2:30 and jumping in a cab and going straight down to Midtown to 101 Park Avenue. And it was really sort of the defining experience of my career because I was thrust in. I mean, there are two or three, but this one was so important. I was thrust right into the limelight immediately because in 1992, the ERM crisis was, in, full-fledged, fully fledged, I don't know, activity or focus, however you want to call it. Germans had just united East and West Germany, and the European economy was probably in its deepest recession since the Second World War. So the interest rates were very high. Julian had a strong sense that the interest rates were going to come down, and that also that the ERM currencies were not aligned at the correct levels. And I don't know if you remember any of this from the old days, but I got in there, barely any experience, got in, and all of a sudden, Julian and the guy who was running macro at the time, the two of them essentially concocted this idea to build these portfolios of swaptions, which are bets on interest rates. And we accumulated, believe it or not, the fund was $3 billion in size. We had $50 billion of notional exposure at the peak that I recall in European swaptions. And that was about $1 billion in premium, long, 1 year, 2 year into 2 year, 3 year swaptions. And so I was the guy physically putting these trades on, calling up Deutsche and Bankers Trust in London, and also doing these currency trades. And we helped push the lira out of the ERM mechanism, the peseta. And it wasn't that it was that they were fundamentally misvalued. It wasn't that we were bad guys doing bad things. It was, guys, you're pegging these rates at the wrong prices. And so the first currency trade I ever did was the forced devaluation of the Irish pund. And they were coming in at the wrong valuation. And I found some liquidity directly through a guy at the central, who was connected to the central bank. And I remember we put this position on, and I mean, the entire firm, equities weren't that big a deal that year, 92, 93, and all of the leverage and all of the focus of the firm were on these bets. And so here they had this 24-year-old guy, manning the helm of what were like gigantic positions. Julian had the largest swaption position on in the world by far. And, and he relied on our team of three guys to really know, what we were doing, how to execute it. So I was like, it was a trial by fire. And, that structure of investment, Julian's big picture, macro views, just I took to right away, and I had a tremendous amount of success also personally in my own accounts, because mostly on these bonds that were appreciating. I think the Spanish bonds rallied 20 points in 1993. And, if you're a young guy and, you have a little bit of leverage and you have a little something to start with, it could turn into a lot. And so right away, I had this, big success and natural affinity towards taking risk on these bigger macro themes. So I know that that's, a bit long-winded, and I can be, so you can stop me whenever you like.
No, it's great.
But
It's great to hear this beginning of.
I basically continued to do more or less the exact same thing, uh, and that and it's translated into different areas. I mean, there were times where I was focused more on precious metals and gold, times grains and farmland. Now it's Bitcoin and, these growth equity companies in the digital asset ecosystem. But the analytical process is pretty much the same. The thought formulation, it all comes from those early days studying history, and then, that I learned at my first experience watching one of the greats.
Yeah. And
Yeah.
and did that translate when you were doing SAC with Kane as well? Or was it like all currency stuff and these various macro strategies, whether it be like metals, or how did you shift from one to the other? Or is it all pretty much the same? Like for our listeners, it would be like maybe like CEOs or family offices. What is the mindset that brought you from one like commodity to the next?
Well, again, it's structural change in the world. So
Okay.
it was pretty clear that with Germany in its worst recession since the Second World War, they were going to have to cut interest rates. That was a great, easy bet. Every macro guy in 92, 93 had huge years. We don't have to talk about how some of them wiped out in 94. But, every, I would say, every structural change that's driven by it's usually driven by something that changes in the fundamentals of the economy, and that warrants a change in price, whether it's in the stock market, the currency, the bonds, the commodities. So, as I said, I'm looking for these big, broad thematic changes. It doesn't start from the product, it starts from the idea. And so, for instance, 1997 was one of the single biggest performance years I've ever had. I was up 100% that year in the portfolio I managed, and the fund that I worked for at the time was the largest Asian hedge fund in the world. And I ran macro for them, and we participated in every single Asian currency devaluation. So it was very clear. I mean, we had a huge position on the Thai baht, and then after the Thai baht broke in July 4th of 1997, I remember very clearly because I was sitting there at midnight or whatever it was, and then the ringgit and the Sing dollar and the rupiah and the Korean won, and they all went over the course of that year. But it was simply because the pegs, those were dollar pegs, the economies were suffering, the local Asian economies were suffering terrible recessions because the currency was pegged at too high a rate. And so it was not natural. I mean, for instance, Thailand doesn't really need to have its currency pegged to the dollar.
So you were
Middle
short.
East currencies are different, but it was a very easy thing for me to see that some of the fundamental misvaluations that existed in Asia, the structure and framework of figuring that out was very similar to figuring out the ERM European currency peg breaks. So it wasn't that difficult, but you had to really believe that there was a future that could happen, and that future was going to be dictated by real economic fundamentals. The reality is that Thailand was in a massive recession and their economy was contracting. and unemployment was high, GDP was negative, and it was all just as a result of the currency being overvalued. So you sat there, and the asymmetry of a bet like that is incredible. You get to buy dollar Thai baht 1 year forward. It cost 1%. And of course, the Thai baht went down from 22, I think it was 21 or 22 when it was pegged, went all the way to 56. And these are currencies that trade massively leveraged. You don't get trades like that. Same thing, Korean won was at around 850 and it went up to 1400. And so, you were making tens of millions of dollars, on those kinds of bets with very low risk. Your max loss on the Thai baht trade would have been 1%, right? If it had not moved, it would have been 1%. And you knew the Thai baht was not going to appreciate because it was already crushing the economy. So it sounded like you were about to ask me a question there.
Yeah, no, I think it's a great trend. It's a great trend because it obviously shows your insight and seeing how the macroeconomy works. So I guess that just leads me to, I kind of like this story path. Like, when was your origin story though? When did you discover
crypto,
like Bitcoin, and how did you fold Bitcoin into your macro perspective? Because obviously before these days, macro didn't include the concept of a hard digital currency. So when did you discover it? When did you read it? When did you transform yourself into this new into see this major structural shift? And where are we in that shift?
Okay, well, hold on. The first part of that question, let me just try. And get at that. Those types of bets were really obvious and clear in macro in the 90s. They were wonderful bets. And then in the 2000s, you mentioned just before my focus on gold, and then the founding of a company called Gold Bullion International, GBI, in 2008. And before that, I was very focused. In 2006, I founded a company when I was working with Stan Druckenmiller at Duquesne called Agcoa, which was a farmland REIT. And so it's typical of a macro investor, trader, portfolio manager to move around to search for those great asymmetries, right? And so in the grain market, we knew there was a big bull market that started in 2006. It was driven largely by the U.S. Having an ethanol mandate, plus the Chinese were sort of coming to the global markets to import soybeans. And I always say the major macro trend there. So what was the big macro trend? China was going from huts to houses. They were going from 2 meals a day to 3 meals a day. And of course, China has the largest hog herd in the world. At the time, it was 400 million head of hog. That's versus 60 in the U.S. So a gigantic, in China, the word for meat is pork. So those pigs eat a lot of soybeans, and essentially the entire supply brought on from, I would say, 2005 till today has just essentially, in Brazil, the entire country's production has been imported to China. So if Brazil was not importing soybeans to China, I don't know. I don't know what they would be doing if they hadn't brought on all that extra land. But I saw an opportunity not just to be long corn, soy, and wheat, but also to build a business and own farms in the Midwest producing certain crops in certain countries. And I wanted to build a diversified portfolio that would be impervious to the volatility, because grain markets, as you know, are extremely volatile, and they can go up and down, 100%, go up 100%, down 70, and up 100, and you've got all sorts of weather issues, etc. And I said, you know what? I think in 5 years, farmland prices could double, and let's get on, I'd like to get on some exposure. People at the time were, I remember speaking to people out in the Midwest saying to me, you're some hedge fund guy from Greenwich, and you think you can accumulate $100 million of farmland? Like, you're out of your mind. Like I had old veterans, guys who've been in the market, in the farmland market since the 80s, telling me like, you can't possibly buy that much. anyway, we ended up building what was the largest private farmland REIT in the United States from '06 till 13. And then in 2013, we sold it to CPPIB, the Canadian Pension Fund System, for $450 million. So we really did aggregate that. We built that business. It was Stan Druck and I on the Duquesne side, and then the Goldman Sachs partners we brought in to help us execute the purchases. And there's lots of due diligence that has to be done. But I go into a little bit of detail there because the exercise of building a business that was leveraged to a macro idea really stayed with me my whole, my career since then. And actually is part of the reason why 10T Holdings looks the way 10T Holdings does. And why was that portfolio? Why is that? And the 1RT portfolios, why are they constructed in this way? It was largely because in 2008, the Farmland portfolio, Agcoa's portfolio, actually marked up 2 percentage points. And aside from bonds, those were the only two assets in the world that actually didn't get annihilated. And grain futures went down a ton. Everything got completely annihilated. Every financial market, every asset. And here I was sitting with this farmland portfolio that was impervious to the greatest financial crisis we'd had in my career. So I thought that was like a superpower. Like, oh my goodness, this is to me the holy grail. I don't have anyone complaining. Investors aren't unhappy. No one feels any pain at all. So you'll see why I'm getting into this, because this is part of the idea, big part of the idea of why the fund is structured that I manage and run and founded now the way that it is. And so I did something similar, a little bit different in '08, '09. I founded a gold business. And it was because I thought, okay, I'm worried about the financial system imploding. The banks are in trouble. And what is the single best hedge for all my assets? It's gold, and it's physical gold. But everyone was telling me that like they held their physical gold at JP Morgan. And I thought to myself, well, if JP Morgan holds all your physical gold, what happens if they get in trouble? Like, you don't want to hold your gold there. You want to hold your gold outside the banking system. So with a partner, an ex-Goldman Sachs partner, we founded this company, GBI. And it was essentially to be able to vault gold outside of the banking system. And we have 7 vaults outside in different places around the world. And we offer, I don't know, at least 50 different products now. The company is still run. The CEO is still my co-founder from the very beginning. And today we're the 3rd largest vaulter of gold in the world outside of the banking system. And the company is really thriving now with gold breaking into new highs. It's really been an exciting experience to be involved with that company. Again, I give you a little detail there because it was in 2014 that company integrated with a company called BitReserve, which is called today the Uphold wallet. I'm sure you know Uphold. And we were the first place in the world that you could buy or sell Bitcoin and Ripple to buy or sell gold. And so that was my introduction. I can remember buying Ripple for fun at 1/10 of 1 penny and, driving the price up in over Christmas time. It was just a lot of, fun, but I didn't really understand Bitcoin in a deep way. And I was not a coder. I was not a cryptographer. When I tried my hand at reading the white paper, I completely was unable to. I didn't know what a proof of work algorithm was. I couldn't even imagine how that worked. And I didn't know anything about coding either. So I thought, this is cool, but this is not like, I don't know. This is not something to devote all my time and energy to. But so then I watched it for a few years. And I say, unfortunately, I mean, like, how stupid was I? I was there in 2014. My company spent a year, integrating with this other entity, and didn't really have a big position, but was involved in a small way. And then in 2018, the market completely collapsed. right? We had the spike up to 20,000 in Bitcoin, then we dropped down to 3,000. And so and I've said this many times, like that is, very often what happens with bubbles in the traditional markets, right? You have a massive bubble and then it drops 90%. And usually, when it's down 90%, it's either going to zero or it's the buying opportunity. So at that time, I thought, okay, let's start buying a little bit and doing research and reading more as we're buying. And I did. I started buying. It was Q1 19. And all of a sudden, I found myself with a decent sized position. And, I found myself just being more interested and in the space and not giving up, really. Of course, I'd had conversations with Raul Powell, who you know as well. Raul had actually been bullish on Bitcoin in 2013, and one of his offsites in the Caymans, I can remember we all pitched our favorite trade, and I think 3 or 4 of the guys of the 12, 13 guys who were there pitched Bitcoin. So there's a very small macro group of guys who understood that Bitcoin was an important store of value. And me coming from, a place of understanding gold, for instance, which is a store of value and a hedge against, central bank, I call it the devaluation of fiat, right? All of this liquidity that was going to be necessary after 2008. Every macro guy knew that they were debasing the currency. Like you had to debase the currency, but there was nothing to debase it against, right? The Europeans were doing the same thing. The yen was doing the same thing. So gold was a natural, but, Bitcoin was born out of that crisis because it was obvious to everybody that interest rates were going to be negative in real terms for many, many years. And what was it? Rogoff, there was a Rogoff paper, who's a famous economist. It was called, but they just talked about how, how interest rates are going to need to stay negative in real terms to work ourselves out of all of this debt and money printing. So as we know, Bitcoin was born out of that. Had I founded, instead of GBI, had I founded a Bitcoin company in 2009, that would have been a lot smarter. But for me, the reasons behind founding GBI were the same reasons behind the formation and formulation of Bitcoin. I just didn't know anything about.
Literally the same exact time as Satoshi.
Yeah, it was the exact same time. But I obviously, I would call it almost the beauty of the white paper is kind of ridiculous. Like, I mean, that's an invention, one of the, I think, great inventions in financial market history. I mean, maybe all markets, not just financial market. I think it's such an important invention throughout humanity. Actually, I'll have Adam back will be on in next month, so we'll get into the technical side. I mean, he is a genius off the charts and a phenomenal guy too. And so, I beat myself up for not getting it in 2014, but I got it by 19. And when I realized what it was, this permanent ledger, and the thing that really got me excited was the security aspect. I thought, so this thing online is not hackable? Like, how's that possible? Wait a second. Do you remember in the 90s, we were all afraid to put our credit cards on the, online?
Yeah, I was in the .com. I was investing in the .com boom, and it's like everyone's afraid to even put their credit card anywhere.
Yeah. And here we are, this decentralized network with thousands and hundreds of thousands of nodes and node operators and miners and people involved in securing the network. And I thought, holy cow. Like, I thought for sure, I said, this is a bigger deal than Amazon. Amazon sells stuff online. AWS, of course, is a big contributor there. But I just thought, that's one company and one guy and one group of people. And at the time, it was trading at around $2 trillion in market value, 2 to 3 trillion. And I thought, this thing is way cooler, way more important than Amazon. Like, this thing could be worth 10 trillion, right? And that's where the name of the fund comes from. That, at the time, the space was valued at $300 billion. That was all the cryptocurrencies plus all the equity was worth $300 billion. And I thought, okay, well, it could equal gold. I think it's important. It's definitely more than Amazon, but let's not call it bigger than gold, which was 12 trillion. So I said, you know what? I'm going to do something that no fund manager that I'm aware of has ever done, which is put a view that I have of a 30x in the size of the market, 300 billion, 30x is 10 trillion. I said, no one is going to believe me that I said it was going to 10 trillion unless I put it in the name of my fund. That was my thought. And so I'm like, let's do that because it's 10 trillion in 10 years because it's a 10-year life growth equity fund.
Inevitable.
That I launched.
Do you include stable coins in that 10 trillion or is that without the stable coins?
All digital asset ecosystem is my number. It's everything in the digital asset ecosystem. That'll be RWAs, NFTs, and all the equity of all the companies. So I had to it was 300 billion in the middle of 19. And I thought, wow, I've never seen a macro trade this big. This is bigger than every single trade I've ever done, bigger than all of the trades put together, just from a macro thematic perspective. Forget about even the money making, which of course is infinitely greater.
Coming from you, that says a lot. I mean, you've been in all these big trades for 2 decades. I mean, it's not just like, when some, first-time entrepreneur says, this is the best engineering team I've ever seen. You're like looking at the investments of 20 years and you think this is the biggest thing there's ever been.
By far, 30 years since the early 90s. Yeah. Because this is a whole structural change. It was, in fact, it's almost such a big macro investment theme that I missed it for years because it was outside of the existing macro framework, right? It had nothing to do with monetary or fiscal policy, had nothing to do even with, fiat currency, which trades $7 trillion a day. It had nothing to do with traditional assets that, today are worth $500 to $700 trillion. It's outside of all that. It's an antidote to the recklessness and the debasement of fiat more broadly. And so
governments and central banks.
I'm sorry, go ahead, Eric.
Sorry. I was just agreeing with you that as central banks and governments have been irresponsible, and this is like the antidote.
Well, you know what? I don't this. We can have a long debate about whether they're irresponsible or not. Because the alternative to them not being irresponsible could be potentially sort of diabolical. Just as an example, Japan's debt, right, is 300% of GDP. What happens to that economy? What happens to that civilization if there's, it's only 50% of GDP? It contracts upon itself in a very bad and nasty way. And the same thing in the U.S. I was deep in the bunker in 2008, and it was a fantastic year for me from a trading perspective because it was a pure macro crisis that many of us have been looking for a while.
Is Bitcoin now Bitcoin is in an interesting space because now we hit all-time high in US dollar terms, at least not inflation included, just the last few weeks. Is there a sense that you're getting on a macro basis that it's transformed even more in the last 12 months than before? Is there some
last 2 months? Look, I think it was, I don't want to say Larry Fink single-handedly turned everything around, but in the summer of last year, he was a real hater. He had said that Bitcoin was for money laundering and fraud. And then he came out in the summer and said, no, it's an important global asset. And we're bringing out an ETF so that everyone who's got a stock account can own Bitcoin. And in the traditional world, and guys I know, I mean, Larry Fink is not considered an investor, but he does run, the largest, entity of its kind. He's got $10 trillion of assets and people respect him. He's very well respected in Washington, D.C. And so it's really a green light for all of those people, those no coiners, all those people in the old traditional world who, for whatever reason, just haven't taken to Bitcoin. It's not an easy thing to understand. And what I was going to say before was that there are three books that really helped me. One was Safed Amos's book, The Bitcoin Standard, then Jan Pritzker's book, Inventing Bitcoin, and then Antonopoulos' book, The Internet of Money, Volume 2. And those three things, and there were others, I mean, I read hundreds of things, those really, brought me to a place where I felt, at least, that I had a good handle on why this was such an important, structural change to the world. On the one hand, you want to blame people like, why aren't people doing more work? Do your own work is a big theme. It's hard to do the work. It took Larry Fink years to switch, right?
Yeah.
So a lot of investors, traditional investors, it's difficult to think outside of the investment framework that you've known for your whole life, 30 years, 40 years, these older guys who control all the assets. It's just not possible. They can think maybe, okay, digital gold, I get that, but I don't believe in that. Like, what do you mean it's online? Like, you just have money. Who controls it? It's always the same questions. No one controls it. But these things are beginning to fade away a little bit. And as more people buy the ETF, I think they will spend more time educating themselves and see the bigger picture that we see. But it's hard to do, especially if you have a successful business already. You really need to spend a long time to really get this. I don't know, Greg, how long you spent before you had your light bulb moment.
For me, it was a little. So I have a technical background. I was a computer science undergrad, and then I went back to business school and ended up Wall Street and the investment banks and doing the investment stuff. So actually, when I read the white paper, my friend sent it to me, and we were basically celebrating another exit that we had. And he said, "Oh, I'm doing the market making
right away
on this." Well, I think Walton. Walton is the one that sent it to me, and I immediately was like pissed that I hadn't read the paper before. And it's not that I got it right away.
What
it's
year
just that that was in early 2017, so not that early.
Oh,
And then immediately wanted to I needed to I was CEOing another company that was about to go public, so I had to transition until my chairman and the team that I wanted to transition out, so I could basically get into our sector. It was like that much of a light bulb for me. And the key was, I've done hundreds and hundreds, and I mean, obviously we've all done thousands of hours of research on this. I got the spark, and I read this book called the Book of Satoshi, which is basically just a book of all of his communications, just like you could see like his post to the group and
who wrote that
communications. It's called the Book of Satoshi. It's really good.
But who wrote it?
Just read firsthand.
No, but who compiled all of it?
Oh, I can't remember the author. I've
never heard of that book.
Yeah, it was very cool.
Incredible.
And for me, it just became like, actually, the way that I usually get people orange pilled is as well as most people, especially in the traditional side, I mean, I obviously come from a traditional side, is owning at least any of it, 0.1, any amount of it. If you're looking at it and then you see how the markets react, you start to want to understand it.
What was the old theme, the old song they were going on about for a long time, get off zero?
Yes.
Wences Caceres, who was very early in converting a huge number of people, he had that get off zero, mentality. It's just like, hey, even if you don't really get this, you think it's something, just do 1% of your portfolio. And that was just do 1%, and then see what happens. And that's exactly what I did. So I am the chairman of the investment committee for the prep school I went to. And the endowment there is
Lawrenceville, I remember.
Yes, third largest or fourth
lacrosse beacon.
Endowment. Yes, correct. Now national champion.
I played lacrosse, and Lawrenceville came to our Bay Area town in Silicon Valley and just crushed us.
Oh, that's good to hear.
Like bugs.
I love hearing that. I love hearing that.
They were fun as hell, though. We had a lot of fun, partying with them and stuff. But their level of skill was just off the charts for Californian.
Yeah. I think the California schools are probably getting a little better. Bishop's apparently has got better. But anyway, so that endowment, I've been on the board there 15 years. And I was able to convince the committee, with some help from another person who, like me, was very interested in the space, to put 1% of the endowment. So we ended up putting $5 million in early 19 and mid 19 into Bitcoin and Ethereum, and then also into 2 funds. And so the 5 million was split up that way. And now that 5, at the peak, it was well over 50. And I haven't looked in the past month or two because I know all the committee guys, they wanted to sell last time. I'm like, listen, when we decided to do this bet, I said 10 years. You got to hold it for 10 years no matter what. And everyone said, okay. But of course, it gets to be a huge number. I think we bought Ethereum at $180 and Bitcoin somewhere like 10. But the crazy one, of course, is we didn't put an investment into multi-coin fund. And so that also, exploded. It was a nice way to express a broader view. And that was part of the reason also I thought, well, what we really need is like 10T. We need a growth equity exposure as well. So the idea for 10T also came out of my own, it's my own personal experience to want to give people the kind of exposure that we provide. And then we have investors like Texas Teachers today and the Michigan Pension Fund MERS. We have a New York City Union Pension Fund. We've got an LA-based endowment. Because our fund has much less volatility, I think less upside than something like a multi-coin, but we also don't have the downside that they suffer every 3 years, because of the cycles in the space. So,
right. And so that's where you came up with 10T and eventually One Roundtable. I guess we haven't really spoken about it too much, but what is your thesis on the next phase, like the next kind of 2 or 3 years? What do you think is going to happen? I mean, there's so much that can happen with both.
Yeah, but Greg, I think the
thesis
is upon us and driving us right now. In one day, from January 10th to January 11th, $100 trillion of total value that sits in global equity accounts had the ability to push a button and buy Bitcoin. So the onboarding of the ETF, you just onboarded the top 5% of wealth in the world overnight. So I think that that's sort of the driver from the Bitcoin side. But as you know, because you're investing in all the venture things that I don't understand, putting your computer science background to use. Now you're like, oh, it's Greg. I'm glad I did CS, right?
Wow. I wish I was a better computer scientist.
What's that?
I said I wish I was a better computer scientist. I did code for about 5 years, but went quickly into the business side and started a company when I was like 20. So,
okay,
well, it is useful. Yeah,
that's an infinitely longer than time than I spent coding. And so the venture side of things, because you're so in touch with that, about all the various things going on broadly within the digital asset ecosystem. That, the explosion in DeFi, the TVLs exploded, the RWAs, the stable coins, NFTs. I mean, all of these things essentially didn't exist 3 years ago.
And now it's the Bitcoin ecosystem. There's all these innovators that are actually
today
building on top of
Ordinal,
Bitcoin.
I think, went for a record amount. Did you see that?
Which one?
One of the Bitcoin ordinals hit a record amount. It was an auction. Oh, yeah. So when you say, like, what's happening in the future, there's so much happening that it's impossible to keep up with it. And you need these 25 to 30-year-old guys. And I've got 6 analysts, who are deep in the weeds, in all the chat groups, they're farming and getting airdrops. And we don't do that for the fun, but I encourage them to be very active because the innovation in the space is just mind-boggling, and it's greater than anything I've ever seen in any space ever. I mean, so to avoid having to make decisions that you have to make about things that are in the weeds and minutia, we invest in the companies generally that make at least 30 to 50 million in revenue and have developed businesses. And we only invest in equity because it's just a lot simpler for my LPs to understand. Also, there are a bunch of LPs we have that legally aren't allowed to own cryptocurrency. So we don't own the tokens or cryptocurrency. But as you know, every single company we own, think Animoca, like how much is on their balance sheet, right? Yeah.
They're essentially one of the biggest venture capitalists on the planet, actually, in this space.
They probably
stealthily under your balance sheet. Yad and his team have made tons of progress. He's actually going to be on the podcast next month also.
Yes?
Yeah.
Oh, and he's phenomenal. Yad is phenomenal. He has such a big picture, big thematic. He's really a macro guy. I mean, he really has that sweeping view, and he's not in the weeds anymore, but his vision for what NFTs can be is very powerful. Very powerful.
Yeah, I also invested with 6529. He has the same kind of NFT vision. It's like NFTs aren't NFTs. They're like the gateway to maintain decentralization. To keep people holding decentralized assets, not just, putting all their money in Coinbase or anything like that. It's kind of interesting.
Yeah, I agree with that. I agree.
What is your I mean, you have all these investments. What is your favorite one? What is your
favorite one? Well, it doesn't really work that way because
you don't have a favorite child, huh? They're all. I love all my children.
It depends. No, I don't love all of them. There are a few there that I would like to give a little bit of talking to. But investment is about business and making money. So it's not really an emotional thing, So I look at each company has the greatest ability to make us the most amount of money for my investors. So that might be different. Than what my favorite investment is. That's just a fun, a fun little thing maybe. And it could be favored for different reasons. I mean, I hate to be so,
Best performing, I guess, is the one that would be on your thesis.
So it's always best performing versus the risk. So I just mentioned company. Well, Deribit. Okay. Yes. There aren't a lot of companies in the space doing 200 in net profit.
You're both big fans of that asset.
The valuation of Deribit is way too low. And I think we're multiples where we both entered. And we do have a position in 2TM, which is the old Mercado Bitcoin, which is a Brazilian exchange. And I think the Brazilians intuitively understand currency because they've gone through many devaluations in their past. And, the currency's down quite a lot from 5-10 years ago against the dollar. Right. It was at 1.7 at one point. It's now near 5. That's a pretty big drop. But the revenues there are a little lighter than I would be happy, that I'm happy with. But we'll see. Maybe this cycle they'll come around. That's probably the one that's most leveraged to the emerging? I'm just looking at my list of companies here now.
You said something interesting, which is that your LPs want to, have size and they have a different return profile, and your team wants to do VC, but you're sticking with this. What is, like, let's say you're talking to an LP. A lot of LPs look at this podcast. Like, what is the return profile of a growth stage venture firm that's focused on this space? What is IRR return?
So
expected?
As far as I know,
there's only one. So what is it that you say if it's not, we're definitely not going for 100x, but what are we going for, and what's the IRR expectation?
5 to 10x is over 10-year life of the pump. I'm pretty comfortable. Right. We write these extensive investment memos, 50 to 70 pages. They take months, explaining why we've made the specific investments that we have, and we underwrite to it for a 10x return. And so we haven't paid, for instance, more than 10 to 12 times revenue for any of the companies. Maybe there's one or two exceptions. This is the great thing. The space that I'm in now is sort of emptied out because the growth equity crossover people, Thoma Bravo and Silver Lake, Tiger, they all paid very high valuations and got burned. We passed on FTX 3 years. We passed on Celsius, but then we also passed on companies we like Blockchain. And the multiple is very important.
Yeah.
Whether we get in or not. So I can love the business to death. I can think it's the greatest business ever. The CEO is the smartest guy. But if he's raising at 15 times revenue, we just can't do it. Because I don't see a path for our LPs to make the kind of return that I want them to make.
Yeah. I think that's a similar story with us, and on my secondary side, we do a lot of like pre-year stage secondaries, and if the multiples aren't good, then it's hard to justify it from any investor should be worried about that. I mean, obviously these big VCs where they're throwing checks everywhere at these massive multiples, the market cap of the whole sector would have to be tremendous. It would have to be reaching your 10T level much sooner if everyone's going to be right, which would be good for everyone, but it might be a challenge. Is your thought that we will hit that 10T now that it's been a few years? Is the 10T number going to happen sooner or later?
I think it could happen in this cycle, but remember, it's not just the value of the cryptocurrencies. I use that as the value of the digital asset ecosystem.
Yes.
So today, it's around $3.5 trillion already. It's $2.5 in the cryptocurrencies, and then another $1 trillion in terms of the value of the companies in the space. So that's a proprietary internal measure we use. So we're already at 3.5. I think we probably get to 10T in the next, probably 2, 3, 4 years. Yeah, we're going to get there. I don't know what you're finding, but the opportunities are still there, even with Bitcoin having gone from 20 to 70. Now, the secondary opportunities, you can still buy stock at 60, 70% discount, right?
Yeah. And so what it is it's the venture order book is not normal. If you imagine it, it's not that the company's worth that 60% discount.
No, of course not.
There's owners that are distressed.
Yes.
And they're like, I don't like this space anymore, or I want to send my kid to Harvard, or I want to buy a boat, and I have my cousin's company has no liquidity and he's not going to have for 2 more years. Like, get me out.
Exactly.
That is a fascinating thing about the the private secondary market. Like when I was at Wharton, I did a thesis project on illiquidity discounts and their myths. I spoke to Aswath and I talked to David Wessel's my advisor. He wrote the McKinsey valuation book. And this is a long, long, long time ago. And then I talked to John Begg at ArborVest, and we were basically talking, like, I wrote this paper, like, illiquidity discount is really something that you and I use to negotiate. It's not a real thing from the owner standpoint. It's a thing from the seller standpoint. So if someone doesn't have enough wealth, they will have a suffering illiquidity discount because they have to sell. But the big owners like you and macro guys, they don't sell unless the market says it's time to sell, which is not a liquidity discount, and they never take that discount. So we go in there and you're actually adding a service to both sides, right? The seller actually needs liquidity. Even though they're selling at a discount, you're actually providing liquidity to someone. And the venture market, like the interesting thing about your fund, if I can give you some, like my perspective, is that the venture market has suffered a drawdown of epic proportion, which is that basically we're in a similar position now as we were in 2004, where venture basically has evaporated after the 2000 to 2002 peak. And then for 6 years, there was just no liquidity for venture. All the companies that we've heard of today, Amazon and Google, they were not trading at very good valuations in that 4-year period. And it was just a huge buy opportunity. And we have a weird situation because you said that the structure of the world has changed in crypto and in Bitcoin infrastructure because we have this liquidity going up and down with the Bitcoin side. But if you were just to look at your fund and my fund as just a pure venture category, we will vastly outperform regular venture.
I hope so. I don't even see what we do as venture. The final thing is that, would you consider
growth or LBO? Even LBOs are having the same.
I don't mean Arbit is venture, but you know what? You're looking at my companies, like all those companies are venture because they're involved with crypto. That is completely false. And so for the moment, we don't really have any competitors because the really smart big money guys in our space, they have very successful businesses. They don't need to move into something that they think is on the periphery, right? And so they made their foray into the space. I mean, Jumbo Bravo is $100 billion fund. They could come in and they do tech, right? Silver Lake, same thing. And they're moving out because, they didn't like their experience. And a company like that could come and completely dominate the whole thing.
Tiger tried to, right? They were buying a lot the last cycle.
Yeah, they had a lot of things going on.
Yeah, I guess I kind of liken you to the visionary of like Silver Lake back in '99. When they said we're going into LBOs in tech, and nobody had ever done it. People said tech companies are not. You don't leverage buyout tech, and then they just transformed, and now there's not a single buyout shop that doesn't have tech on their portfolio that's alive, at least.
That speaks to a bigger thing, which is that just tech is just taking over everything. And I think the places within the market like real estate and banking, these traditional areas, there's no way they can compete with the tech.
Yeah. Well, I see what we're doing is essentially the transformation of that financial world, banking and markets. They're getting techified, you might say.
They sure are. Why aren't there more people joining us, right? It's just me. You're, one of a handful of venture guys, right?
I don't know. I think, like you said, it's a hard learning curve. And you also, if you have an existing, like I have a couple good friends with very large funds. And when I mention Bitcoin to them, they say RLPs are not ready, because they're making top quartile returns in their venture business before. So if they're like to throw in this mix, it's like a monkey wrench. It's an innovator's dilemma in venture, essentially. Why am I going to cannibalize my existing performing product, with the product that's going to put me out of business? And I don't know if that's the case, but we're making our bets, right?
Well, it's hard when you have a lot of success in one area. There's no incentive really, right?
No.
To move into something on the periphery. But thankfully we have, and we did. And I think within the next 5 years, it's not going to be in the periphery anymore. And this ETF thing, and the one that's coming for Ethereum is just part of the slow evolution of adoption manifesting itself.
I know that we have been talking quite a while. It's been a lot of fun.
Yeah.
Is there anything you want to talk about that we should? There's always questions I should have asked that I got distracted with your interesting chatter. Is there something I should have asked you that I missed?
No, I mean, I think it's, it's just, there's so much going on in the space. You could take any conversation any which way. And I do come at it from this macro perspective.
So in our podcast, the whole point is to have like sets of three. So I had Arthur on, I have you. My idea is to get at least three people talking about macro in a really different perspective way, and then like and then Adam's part of like the Bitcoin origins, three episode take. But let's wrap up, and let's see how this cycle goes. Maybe we can talk again same time next year, and like sometime in the future, and see if some of our predictions are on track, and see how our portfolios are doing. It's been
my pleasure.
A tremendous pleasure talking to you.
Yeah, that's great.
We have some of your history. I got some stuff that I'm going to go research, and I think next time I'll have even in more exposing questions for you, I'm sure.
All right,
But
that's great.
enjoy the weather. I know that you're enjoying a very tropical weather down there, and
Indeed.
literally a stone's throw from me. Even though we're on the video, we're a stone's throw from each other right now. So thank you, sir. Thanks so much.
All right.
We've had Dan Tapiero, and
Talk to you later.
we've had another interesting conversation about the financial markets ecosystem, and we'll see you guys all next time.